Cathie Wood. Cathie, it's great to have you back on the show.
Thank you, Morgan. I'm really happy to be here.
So much to talk about, but first I do want to start with a broader market question. At a time where even some market bulls have been suggesting that this rally is getting a little long in the tooth and questions should be raised about the valuations we're seeing, how do you think about the market here? Are you considering different positions across your funds as we do see some of these biggest names, particularly in tech, reaching new highs?
Yes. So right now, we've had a bit of a setback thus far this year, a little fear, higher for longer again in interest rates. But just think about the numbers that we're beginning to get out of the big macro-oriented companies. 3M's revenue down 4.5%. That's negative, both units and prices. And I just heard you on Texas Instruments. I think their sales this next quarter are going to be down at the midpoint, something like 18%. That's year over year. These are revenue declines. We've been saying for quite some time that there are more deflationary forces out there that many people recognize. A lot of them are coming from China, now more so as well from Europe. And I think that here in the United States, we won't escape that. So we actually think interest rates are going to fall sooner and faster, I think, than most expect. And so in terms of valuations, that should be very supportive to valuations.
It should be supportive to valuations. I wonder if you believe that we're in store for a soft landing then, or if the Fed's behind the ball and cuts are going to be even more steeper than perhaps the market is anticipating.
Yeah, we've been saying that we've been in a rolling recession, we believe, for 2 years, and that the Fed is going to find out that 5.25 to 5.5 was just too high given the deflationary forces that are building out there. We think there's going to be outright deflation this year, price deflation, some of it good, associated with technology and learning curves and so forth. But some of it bad, which is more of the hard landing scenario. It won't be like 0809 at all. We've been in a rolling recession for a long time now. But we do think we're at the end of it and that the Fed will lower interest rates.
Speaking of deflation, Cathie, Tesla's been cutting prices on cars. Investors have been cutting Tesla's stock price. You bought Tesla last year when it was cheaper than this. I think you bought some more, a good chunk, a little bit more than a week ago. Do you keep buying it as it goes down, if it continues to go down this year?
Well, if you watched our trading, and we do publish our trades at the end of every day, you'll see that we've been trading Tesla at the margin. So when it is soaring and everybody's excited about the good news, as we move towards electric vehicles, we will take profits. And likewise, as investors and traders begin to fear that we're going to be in an air pocket, we've got a 5-year investment time horizon, and we think that in 5 years, most car sales will be electric. And that is a trend that lower prices actually are going to encourage. So that's the good deflation, as we've got electric drivetrain prices coming down.
Okay.
In price. Tesla can price down. It can price down if we're in a weak spot globally, and it does appear that we are, certainly China and Europe. And even here in the United States.
Yeah, I mean, people really love Teslas. That's not translating into how much Teslas cost to repair and maintain, and the viability of them maintaining a fleet. So I understand that you're trading around it now, but for the people at home who don't necessarily do that day by day, where's your even mark? Where if it goes below here, that's when you're really pushing into it, leaning into it.
Well, we cannot talk about what we are going to do prospectively, but just to address Hertz. There is a learning curve with EVs, and I think a lot of people go to Hertz and say, I'm going to try my first EV, and they learn, okay, if you're going to drive 50 miles or 100 miles, you've got to start thinking about charging. So a bit of a learning curve. It is true that the repairs cost more, but maintenance also costs 60% less. So there's a bit of a trade-off. If you listen to Uber, on the other hand, Dara will tell you that they're encouraging more of their drivers to rent from Hertz and others because the drivers get more. Uber's take rate is not more, so it is really beneficial for drivers, and consumers love them. They're willing to pay up. So, when innovation is evolving and the infrastructure is moving into place, but not quite there, especially in terms of repairs, you're going to go through fits and starts like this. But the trend is undeniable. Okay. Last year, electric vehicle sales globally were up 28%, while gas-powered vehicle sales were up 9%. So share gains still.